if you ever have a question about a stock. Hey, and you can even type in the VIP feed, urgent, because I got the feed open all day. I'm in there, with Mission Winners, and I try to answer these questions very quickly. Hi, this is Pat Walker at Mission Winners. Hopefully, as a VIP, you're in the feed and you see me constantly talking about selling tactics. But let's go through a couple of them. When we buy, we want to buy right, pushing through a line with volume, like Tesla, and walking up the line. When price gets a bit extended, or it looks like it's stalling, we can always sell 20% off. I love to do that, and there's a reason why. A, it guarantees profits. Think about this. If we sell 20% right here, that sucker can come all the way down near our price, and we can sell the last shares, the 80% that's left, and we made money. We made good money. It puts us in the driver's seat from a psychological perspective, and I love that. So I want to sell even when it puts in a reversal pattern, if it loses a shelf on the daily chart, if it takes out the previous day's lows on volume, I may sell some. If it starts to lose at what you said, and you're right on, if it starts to lose the 8-period exponential moving average line, I'm going to sell some. Starts to lose the 20, I'll sell more. And let's do a real world case right here. Watch this. Look at that. Coop, we bought down here. We sold some into strength. We sold some here. Look at the volume losing the 21 EMA. Now it's walking on the 50-day. Where do you think we will sell more if not the rest of it? Losing the 50-day. Is that awesome? I love it. Livongo. We sold here. We sold some here. Where will we sell the rest of Livongo? Where there's a shelf right here, but it's very close to the rising 50-day. Loses the 50-day. The rest is sold, and it's fine. The stock was bought down here near 43 and the sucker's 87. So it's more than a double on these shares. So that's how we'll do it. This is GSX, by the way. I'm sorry. Anyway, I don't look at average true range. I know some people that do, but I will look at it if it's breaking. Like right here, this one, I'll draw it. GSX. I'll get concerned if it loses that neckline right there. That's a sell. And then if it loses the 50-day, that's another sell point. So I'll give it all the room I can, but when it starts losing support spots, those are spots for us to take some out or take it all out. Anyway, this is Pat Walker of Mission Winners. I'm making a video for Chris. Chris, first off, thanks for being a VIP, buddy. Good working with you, good working for you. I see you bought, you said you bought NEO. Good job. And, I can see you did it right. When the stock dunked a quick 25 cents, look at that. Inexperience, and that's okay. That's okay. The fear of lost gains. Here's a great solution that will help you, all right? Try to avoid pre-market trading, and I hate to use the word trading. Try to avoid pre-market activity. Let the son of a gun work for you. It's kind of like a great quote I love, only the still pool reflects the stars. It was a clean and simple breakout. It broke out on really heavy volume. Let that animal work for you. Give it a little time and see what happens. And, the next day it gaps up. It looks good. Today, quiet inside day on less volume. We sold a little bit off, as you know, and locked some profit in, so we're in good shape. Where will I get concerned? As I said today to the VIPs, if it starts losing these lows, I'll sell a little bit more. The beautiful part is this. We've got the rising 8-day for support. And here's the best part. We've locked a little bit in. This sucker can come all the way back down to our buy price. And you know what? You know what I'm going to say. We'll make money. That's huge. We're in position to let the animal work for as long as possible. So how do you deal with the pre-market? I'll be honest, I don't look at it. All-time highs beget all-time highs. Strength begets strength. You'll sell a little bit into strength, but here is a great mindset, all right? Do not sell all of it. Once you have a good profit and you've locked some in, think about this mindset. You buy this and you've sold some here, okay? This can come all the way back down to your price and you still make money. What does that mean you can do? Give it a little room. But after you're up 3-4 points, don't ever round trip it. Don't ever let it turn into a loss. You're in the dang driver's seat now. Just let it work. Don't look at 5-minute charts. Don't look at 10-minute charts. We're in the driver's seat. When will I be more concerned if it starts to lose today's lows or the previous day's lows? I'll sell a little bit more. That's all. That's all. All I know is this, and I've learned this from great investors. We limit losses. We don't want to limit profits. Let the thing go. Think about this when something's at all-time highs. You know what? There's no freaking overhead supply. We're in great shape. So let it work. Good volume. You know what I look at? I'm just looking at right here. I think that's the 21-day volume. Just for volume surges versus previous days. And you can see it had that. Look at that. Boom. There you go. Look at the volume. We're buying. That's simple. I look at the daily, the hourly, and 30-minute. And it really, really helps. Anyway, Chris, I hope that helps you. Don't be concerned. Let's try to buy clean and simple. Maybe just sell a little bit off into strength, follow our lead, and let that animal work. And here's the other thing you can do. After you've got a decent profit, put a sell stop 20 cents above your price. Just leave it in. Good till cancel. And then as the thing starts to push away, raise the sell stop a little bit. Let it work. Big trends. I mean, this is big money right here. Okay? Hello, this is Pat Walker at Mission Winners making a video for Raouf. So you ask a good question. What is the best way to find new breakouts from a long base? That is a great question, and this is what I do. I use MarketSmith. Here's what I found. I'll scan, and I know this for a fact. Two big foundation. Stocks that last quarter's earnings were up 40% or higher, or last quarter sales were up 40% or higher. It's over $20 a share. It trades more than 200,000 shares a day. It has an accumulation distribution of either A or B. It has a composite rating of over 90. It's within 15%, 20% of 52-week highs. It's above the 200-day. I'm telling you what, I've got my screens. They show that, and it works like a champ. Well, this is Pat Walker at Mission Winners doing a video here for Michael. Michael, you got a good point. I agree with you. You can have stocks that'll break out and pull back. But I'll share this with you. Through the years, and I mean years, we are have become so stringent in our screening processes, fundamentally and technically, that by and large, I will tell you this. When things are good, and there's a very important part of what I just said, when the markets are good, these stocks, they just go. They push through that pivot, and I'm watching the volume on the daily and the hourly and the 30-minute. They just explode in price, and they never come back and retest you. The biggest problem was you couldn't get enough shares. They just go. They just go. That is why I am really hung up and have been for years, I mean years, on really clean and simple chart patterns, which I want to lead to a point here. I'm not interested in the cup and a handle type of deal, for the only setup. This is what I found, and I was an IBD meetup co-leader. By Jove, we wait for the cup and a handle, we're going to starve to death. We have a couple of different patterns, like AMD. AMD just goes. Look at the volume. It just goes. Remember we did JD? JD, right here. Just goes. Look at the volume. It just goes. I love those. I absolutely love them. The ones that don't go, I'll tell you what, normally it means they're going to go lower. And so it does something really great for us. It keeps our losses much, much smaller. I'm not interested in freaking 7 to 8% losses. I want to keep them really tight. And with this tactic, it works. Am I going to say that, every once in a while we have a stock that runs up and falls back and we sell and then it turns and goes hot back? Yeah. Anybody who says they don't is a liar. for sure. But by keeping the losses smaller, I can move back in with a clear head. It doesn't bother me in the least. And this is something. Hello, this is Pat Walker at Mission Winners. I'm making a video for When Who. I see your question, and it's a great question, about different, 8 to 10 for accounts. Yes. Here's what I found. First part of that. I have found you get over 10 to 12 stocks, man, it's like today's like today. It's just too darn hard to follow them. Let me tell you, drive you darn crazy. So just number one, I found that I'd rather know 8 to 10 stocks really well, really go deep and do the homework, than own 20 stocks halfway. And then I'll also share this with you, and I know you know this. It's too hard to manage 20 stocks. The way these markets move, it's just literally too much, and it increases stress. So that's what I find. Also, we talk about dollar amount and things. Here's the beauty. We don't buy low price stocks. So it's easy. Well, you say a stock like Apple, heck fire, you buy 1,000 shares, that's a lot of money. That's $100,000 right there. So we're careful with all that. All right. I would take it, whatever your account size is, divide it by 10. And we can talk about, we'll go on margin. Okay, well, we can do that. And so then you take your account, double it, and divide by 10. Okay? I want to bring up a point here, though. Please be careful, and I'm sure you know this. Please be careful going on margin. I think it's very important that we master the tactics, the techniques, and the strategies. Develop a skill set before you start going on margin. And I'm sure you know that, but I just wanted to say that. I think that's very important. All right. I like to take more of a cautious approach than be overly aggressive, and definitely not reckless. So yes, different accounts for sure, but manage them all the same way. Yeah, you bet. The tactics are fine for an IRA. The tactics are fine for a single account. The tactics are fine for a joint account. They're fine all the way around. Now, does that mean I'm going to buy the same stock on all the accounts? Well, you know what you might want to do, but see, then it gets out of hand. Let's suppose you've got 3 different accounts and you're going to buy 10 different stocks for each account, or get up to 10 different stocks. There's potential, and you know where I'm going with this. All of a sudden, you got 30 stocks you got to watch. No, my philosophy is this. We do our homework. We do our due diligence. If it's good, if it makes the cut, then we're ready, by Jove, to put that in the different accounts. Try to manage 8 to 10 stocks. Have them in 3 different accounts or whatever. But we manage them. And also, I wanted to share this with you. If you ever have a question about a stock, hey, and you can even type in the VIP feed, urgent, because I got the feed open all day. I'm in there, with Mission Winners, and I try to answer these questions very quickly. Strategy to buy. Yeah, initially buy 10%. Yeah, you want to buy. There we go. Yes, you're going to buy 10% of Tesla. Yeah, total it up. Let's suppose you've got 3 accounts, X, Y, and Z, and you add up the numbers, and the total for all of them is X plus Y plus Z. Take that number, and we'll call that number W. When you're buying, just take W and divide it, right? That's W's the total. So you pick that amount and you put it in, and then you just allocate it accordingly to the different accounts. And I do stress, and I think this is important, when who, I would try to not get more than 10 stocks.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.